Good morning. This is the Option Pit AM Volatility Report. I'm Mark Sebastian. Our next webinar is coming up. Is going to be on the. It's going to be on July 7th. Go to optionpit.com/calendar trading to sign up. It's going to be a really good time. I'm going to teach you some really good stuff on calendar trading. Should be a good one. All right, let's talk about the market. Well, more positiveness out of the Greek deal. I think really the market's starting to think that it actually could happen. Really, everything's moving up nicely. You've got the S&P up a little bit, got the RUT up a hair, but where you do have things kind of really popping. Take a look at the VIX. I mean, threatening toward that 11 level. VIX futures are down more. I mean, there's a nice 2-point spread, but really, those are pretty cheap. A little bit of a rise in RVX. RVX gotten a little oversold. And so, as I look at volatility, I think RVX is probably the buy. I wrote about that in our blog last night, and in our strategy letter, we executed a RUT double calendar that we're kind of excited about. We also think that volatility in VIX maybe has a little lower to go, but not a lot. Areas where volatility probably is going to rally or sell off. Oil continues to do nothing. Look at a chart of USO. All right, it's done. And then the other area where things may be topping out. I think we got another day or two of euro currency before things really start to kind of figure out where they belong. And that's going to, in my opinion, be a relatively big driver. Another interesting thing, look at the movement in U.S. interest rates. TLT down to 116, IEF, which is the 7 to 10 year, down below 105. Things are, the long end of the curve is starting to move. Now that's actually a good thing, because I had heard a couple of different analysis that there was a chance that we have, if this is the U.S. yield curve, let me show you. All right, so if this is the U.S. yield curve, which is kind of what it looks like, all right, there was a real threat that we could actually see it flatten, so long-term rates don't really even do anything, and near-term rates do. Well, now it appears we're going to actually see things steepening, which is a good thing. So we're going to see the curve steepen a little bit, soften up. So I think we're going to see the curve kind of do something like this. So near-term rates won't move very much, but some of the long-term rates will actually rally, which is a good thing because it'll probably loosen up credit, which needs to happen. Slightly higher rates, I think, would be good for the U.S. economy because it would really loosen up credit, and it would make stock buybacks less attractive and kind of force investment in capital markets. Now, on the day, you can see we're kind of, the VIX is still down. I think you'll see, a little follow through. I think we're going to break our all-time high today. That's the way things are looking for this S&P. NASDAQ already is. It's now above 45, 42, the NDX. But I think you could see the S&P get a little bit of an extra push in the afternoon up toward like 2132, 2133, and then who knows from there. But this may be the all clear for a move higher, a move up toward 2150. On the day, like I said, I think we could see the VIX this week threaten an 11 handle as they price out July. They price out July 4th weekend, lots of stuff. So on that note, I hope everybody has a great day. You got questions, you can email me, mark@optionpit.com. You can call me 888-TRADE-01. Don't forget to check out our thing, optionpit.com/calendar trading. Have a good one.